In this chapter, I am going to cover all the questions of modern business environment. So it includes all the sources of ICI material, means illustrations, test your knowledge questions, skill-based assessment questions, case studies, case scenarios, all that, case study digest, everything. So, first question, H Automobile Group is among top 20 business houses in India. It has been founded in the year 1930 at the height of India's movement for independence from the British. The group has an illustrious history. Its footprint stretches over a wide range of industries spanning automobiles, two-wheeler manufacture and three-wheeler manufacture. Its headquarters is located at Hyderabad. Bike production is one segment of H Group. Management of H wants to analyze the following actual information for the April. So it is a irrelevant content about it is about the company. So it do not have any valid points to remember. Next, cost data. Customer complaints center cost 35 per hour. Equipment testing cost 18 per hour, warranty repair cost 1560 per bike, manufacturing rework cost 228 per bike. Volume and activity data. Bikes require manufacturing rework 3200 bikes. See here they have given per unit cost, per hour cost. Then we should know the unit or number of hours. No, here they gave the volume. So bike requiring warranty repair is 2600 bikes. Product line equipment testing time 1600 hours. Customer complaint center time 2000 hours. See we have to multiply. Customer complaint center cost is 35 per hour. So how many hours does their center invested in the, see, 2000 hours here. Customer complaint center time is 2000 hours. So 35 into 2000. What is the answer? 35 into 2000. 70,000, like that. You need to find each and every cost. They have given per unit only. Due to the quality issues in the month, the bike production line experienced unproductive downtime, which cost 7,70,000. Okay, unproductive downtime. What is the downtime? Internal failure cost. Okay, and all the scrap, downtime, reworks are internal failure cost. It is 7,70,000. X carried out the quality review. X carried out the quality review of existing suppliers to enhance the quality levels during the month. 1,25,000. They have given some cost. Okay. Prepare the statement showing total quality cost. What I said about total quality cost? Total quality cost. Cost of quality. It is nothing but the same. What does it include? All the cost required for getting a product quality. So it includes good cost of good quality plus cost of poor quality. So here they ask for a statement of total quality cost. So we should include all the good quality cost and poor quality cost. And in that also we have two types: prevention, appraisal. And in poor quality, internal failure, external failure. So bifurcate among these, which are what type of cost. So customer complaint cost, it is incurred after selling to the customer, so it is external failure cost. Next, equipment testing cost. So equipment testing is done during the production, no, so it is appraisal cost. Next, warranty repair. Warranties are incurred after the sale to the customer, so it is external failure. Manufacturing rework, anything redoing is comes under internal failure cost. Bike requiring manufacturing rework. 3,200. So we should multiply this with that. Next we have to find what is downtime. Downtime I already told you, it is because we lack some internal control, so internal failure cost. And next 1,25,000 existing sub quality review. See, anything which come for quality, then it, what we will call it as prevention cost. So get all these costs. See, equipment testing cost, how many time, how much time? 1600. 1600 into 18, 28,800. Warranty repair cost 1560 per bike. Warranty repair 2600 bikes. 1560 into 2600, 40 lakh 56,000. And 228 manufacturing rework 228 per bike. How many bikes requiring manufacturing rework? 3,200. Here we have not 3,200. So 7,29,600. Again these two costs also there. So it cost, we have to prepare the cost of total quality cost statement. So total quality cost statement, what does it include? First, prevention cost. Only one prevention cost? No. What is that? Exist review, quality review. 1,25,000. Next, appraisal cost. It is done. Appraisal cost only one, 28,800. What is that cost? Equipment testing. Next, this is done, no? Internal failure cost. 7,70,000. Here one it is there. What is the downtime? Next one, rework. Here this one. How much it is? 7,29,600. Next, external failure cost. We have two external failure costs, no? Customer complaints and warranty repair cost. So customer complaints is 70,000 and warranty repairs is 40,56,000. Add all that to 1,25,000 plus 28,800 plus 7,70,000 plus 7,29,000 plus 70,000 plus 40,56,000, which is the 57,79,400. This is the cost of quality, total quality cost statement. Okay, this much only. This is the thing they have asked for. Advise any two measures to reduce the non-conformance cost. See, non-conformance cost means internal failure cost and external failure cost. How can we reduce that? One, internal failures we can reduce by total productive management. Okay, so that we can reduce the downtime or any reworks, all that. We should maintain the equipment properly in working condition and avoid all the breakdowns and delay in manufacturing. So we can reduce the internal failure cost. And next, total quality management. We can increase the quality and reduce the defects. Okay. These two methods are used to reduce the non-conformance cost. We haven't discussed TPM yet. TPM we have discussed in this chapter only. So you should write everything what you know, because what is the aim, what it stands for, and how can it be achieved. All that we should write. Don't write in a single sentence. TPM and TQM, we have to write in brief whatever we have discussed in class. Okay. For that you can refer my notes or class. Notes will be in Telegram channel given in the link. Coming to the second question, NZ Limited implemented a quality improvement program and had the following results. Okay, see, in 2021 they have this much of quality costs, and in 2022 they have implemented the quality improvement program, and they have this much of quality cost, total quality cost. Analyze the quality cost as prevention, appraisal, internal failure and external failure, and compute the amount of increase in profit due to quality improvement. Okay, we should first bifurcate it. How much is the which is which cost, means what is appraisal cost, what is prevention cost, what comes under internal failure, all that we should bifurcate. And next we have to calculate what is the increase in profits because of this improvement in quality. Okay, so first bifurcate it. First we have preventive, appraisal, internal failure, external failure. Okay, first sales is the same amount, but scrap how much is there, what is the scrap? Internal failure cost, no. Rework is also internal failure cost. Production inspection is appraisal cost. Product warranty is external failure cost. Quality training is preventive cost. And next, material inspection is also appraisal cost. How I have divided all this? See the concept video, you can understand how I divided all this. So write the scrap amounts right here, 2021, 2022. Okay, under this scrap, rework, both 600 in 2021, 500 here, next 300, 400, and we have done with this. Production inspection, appraisal, production inspection, how much? 200 in 2021 and 240 in 22. Next, external failure cost, product warranty, it is 300 in 21 and 150 in 22. Quality training, preventive, 75 in 21, 150 in 22. Material inspection is an appraisal cost, so right here 80, 60. Calculate each difference. See, preventive cost has increased from 75 to 150, means we don't have profit here, we have invested more, so we negative 75 extra amount we have incurred. Here appraisal cost also extra 40 we have incurred. Material inspection cost we got reduction of 20 rupees. So net increase of 20. Next, scrap has reduced from 600 to 300. So we gained a profit of how much? 300 positive. And rework also decreased from 500 to 400. So 100 rupees. Net total 400 and 300 has reduced to 500, 150. See, these are rupees in thousands, okay? 150,000 means 1,50,000. So 300 minus 150, 150. Add all this. How much? 400 plus 150 minus 20 minus 75. 455. Okay, this is the total quality. This is the profit. What is the total quality cost here and here? 75 plus 200 plus 80 plus 600 plus 500 plus 300. 1755. Next 150 plus 240 plus 60 plus 300 plus 400 plus 150. It is 1300. So we got the same difference here. No, 1755 minus 300 is 455. Okay. So we have calculated the net increase in profits due to the quality improvement. Okay, we have done with the answer, and you need to write everything we have like preventive cost. Quality training comes in a preventive cost. It got increased from 75 to 150. So we have incurred extra of 75,000. And appraisal cost, both these costs comes under appraisal cost, and it got increased by 20,000 rupees. Everything you need to write theoretically. Next question. Third question. CEO of P Limited is concerned with amount of resources currently spent on customers' warranty claims. Each box of his product is printed with logo, satisfaction guaranteed or your money back. P Limited is having difficulty competing with X Limited because it does not have a reputation for high quality that X Limited enjoys. Since the warranty claims are so high, the CEO of P Limited would like to evaluate what costs are being incurred to ensure the quality of the product. Following information is collected from various departments within the company relating to 2021. So they are getting more warranty claims, it seems. So in order to, they want to compete with the person who is giving more quality, the CEO of the P Limited has decided to get all the information regarding what cost increases the quality. So they got the following data. So warranty claim, these are all the costs incurring now. Warranty claims, employee training cost, rework, lost profit from lost customers, cost of rejecting units, sales return processing, testing. For the year 21-22, the CEO is considering spending the following amount on a new quality program. Okay. So as the above, he is incurring above cost, he want to adopt a new policy. So how he want to incur? Inspection of raw material, re-engineering of production process, supplier screening, prevention maintenance. P Limited expects the new quality program to save cost by following amount. See, if he incurs this amount, there will be a decrease in this amounts. Means originally they have this, no, this will be decreased by incurring this amount. We have discussed this in class itself. If we incur more on quality, we will incur less on loss of quality. So they will obviously reduction in the bad quality cost, reduction in lost profit from the lost customer due to impaired reputation, reduction in rework cost, reduction in warranty cost, reduction in sales return processing. See, all these are bad quality cost, poor quality cost of poor quality. And see all these inspection in raw material, this is what is this? Appraisal cost. Re-engineering the production process. So their re-engineering process itself means pre-production work, that is preventive cost. Supplier screening, this is also prevention cost, preventive cost. Preventive maintenance itself preventive cost. So by incurring cost of good quality, cost of poor quality will be reduced. So how much they will be reduced? This much. Okay, how much they have incurred? This much. We have to calculate that. So what they are asking here, first question, prepare cost of quality statement for the year ended 2021 showing the percentage of total cost of quality incurred in each cost category. Okay, we should prepare cost of quality statement. See what I said about cost of quality, cost of good quality and cost of bad quality. So we have to bifurcate this. That's it. Nothing special in that. Preventive, appraisal, internal failure, external failure. So first bifurcate which is which cost. This is cost of quality statement. Warranty cost when it is incurred after going to the customer, so it is external failure cost. Employee training cost, it is preventive cost. Rework, internal failure. Loss of profit, external failure. Cost of rejected goods, internal failure. Sales return processing, external failure. Testing, appraisal. Okay, so write all that. Warranty claims 4,25,000. Preventive cost in employee training 1,20,000. Rework internal cost 3 lakh. Loss of profit external cost 8,10,000. Cost of rejected goods internal cost 50,000. Sales returns processing external 1,75,000. Testing appraisal cost 1,70,000. Apart from this, what they have asked, showing the percentage of total cost of quality incurred in each category, means what is total cost? See once right here, cost from each heading, side heading, each category 1,20,000, 1,70,000, 3,50,000, 4,25,000 plus 8,10,000 plus 1,75,000, 14,10,000. How much total? 14,10,000 plus 3,50,000 plus 1,70,000 plus 1,20,000, 20,50,000. Okay, what they have asked percentage of each category for total quality means 1,20,000 divided by 20,50,000 into 100. They are incurring only 5.85% of total cost in preventive 1,70,000 divided by 20,50,000 into 100, 8.29%. 3,50,000 divided by 20,50,000 into 100, 17.07%. 14,10,000 divided by 20,50,000 into 100, 68.78%. Okay, this is the percentage of each category incurred in total cost, total quality. Next, what they have asked in the next question. Prepare cost benefit analysis of new quality program showing how the quality initiative will affect each category, each cost category. Means we have to show the benefit of this quality. They have followed this. No, firstly they have invested in this. Next they have incurred this. So we have to show the benefit analysis. How which cost is reduced. Bifurcate, we have already bifurcated the above cost, so bifurcate the below one also. Loss of profits means external, reduction in rework cost means rework is internal failure cost. Reduction in warranty cost means external failure. Reduction in sales returns processing, external failure. Okay, now again bifurcate preventive, appraisal, internal, external. Okay, how much they invested in appraisal cost? Only this one, inspection in raw material inspection. So how much? 7 lakh, okay, 1,20,000 negative. They have invested that, no, it is outgoing. And how much? See, we should write only net figures, net effect. This is increase in quality, increase additional cost incurred. This is reduction, means how much is the original cost, reducing that, how much reduced, the difference will is the this amount. What I said, this is the difference of what is incurred in last year and what is incurred in current year. Okay, so only net benefits, net effects are they are taking. So we should take net effects in both the cases. First write this cost, preventive cost, all other are preventive cost, no? 7,50,000, 30,000 and 70,000 means 8,50,000, no? Write the total amount here. From this side 8,50,000, from this side 1,20,000. This is the negative amount. Here there is a reduction in this cost, means it is a positive effect. Okay, reduction in lost profit from lost sales due to impaired reputation, external failure, lost profit. We have a benefit of 8 lakhs. 8 lakhs got reduced, no? That's what. Rework cost, reduction in rework cost is internal failure, 2,50,000. Reduction in warranty cost, 3,25,000. And sales returns, 1,50,000. So this one 2,50,000 and here 8 lakhs plus 3,25,000 plus 1,50,000. 12,75,000. Total amount 12,75 plus 2,50,000. This is the profit we got from incurring in cost of good quality. Minus how much we incurred, 8,50,000 minus 8,20,000. Ignore my writing. 5,55,000. This is the answer. See, in SCMPE, don't panic seeing all the largest questions. One of my faculty told once in the class, if they are giving big question, means they are giving more details. We have to find only some details. Everything is available in question. Okay, don't panic seeing the lengthiest questions. State how manager trade off among 4 categories of quality cost. This is a theoretical question. So how he will trade off investment in good quality reduces the bad quality, cost of bad quality. Okay, but over investment may not reduce that much of bad quality, so they should opt optimum cost of quality at which they can achieve the maximum profits. Okay, that's the final answer. We have to write something information about everything, prevention, appraisal, and what are the costs in that, how they'll reduce that, and so all that information we need to write, whatever we know about the cost of quality. Later on we can conclude with these 2 points. Okay, next question. A company produces and sells a single product. The cost data per unit for the year 2022 is predicted as below. See, they have given per unit cost: direct material, direct labor, variable overheads, and selling price. Okay, next. With this, what you can find out here, contribution. Okay, only that we can know. Next, the company has forecast that demand for the product during the year 2022 will be 28,000. So they are estimating a demand of 28,000 units in 2022. However, to satisfy this level of demand, production quantity will be increased. Okay, why production quantity increased? Because sometimes some products may be defective, some products need some rework. So obviously, if they want to reach this demand, they need to produce more. There are no opening and closing stock for the product. The cost level of the material remained unchanged throughout the period. Uh, the following additional information regarding the cost and revenue are given. What they have given: 12.5% of items delivered to customers will be rejected due to specification failure and will require free replacement. The cost of delivering the replacement is 5 per unit. Means product after going to the customer, they will find some failures in that and they will reject some project. So uh, they have to replace the product and give it to the customers. It will cost 5 rupees for them for this cost of delivery. 20% of items produced will be discovered faulty at the inspection stage before they were delivered to the customers. See, this is first one is after delivery to the customers, customer will find the defects. Second, what they have given the second point, they will find themselves at the inspection stage. It means some defective products will be found in which state is the internal failure cost. 10% of direct materials will be scrapped due to the damage while in storage. Due to above, total cost quality cost for the year is expected to be 10,75,556. They have given the total quality cost. They have only given, and what they have given, 10% will be direct material scrappage. Means from if we buy 100 units, only 90% will be good units, 10% will be defective units. Okay, this 20% from 100 if they produce 100 units, only 20% will be only 80% will be good units. And if we say in third point, if they sell 800 units, only 87.5%, I guess. 100 minus 12.5. This will be accepted by people. Remaining will be rejected goods. So what they are asking, company is now considering the following proposal, as they were incurring a total quality cost of 10,75,556. They want to incur, they want to adopt a new policy to introduce training programs for whole workers, which the management of the company believes will reduce the cost of level of faulty production to 10%. This training program will cost 4,50,000. So if they incur 4.5 lakhs into training, it will reduce 10% of defects in production. And to avail the services of quality control consultant at an annual charge of 50,000, which would reduce the percentage of faulty items delivered to the customers to 9.5%. Okay, if they incur 50,000, items delivered to the customer will be reduced by 9.5%. Okay, prepare the statement of expected quality cost that company would incur if it accepts the proposal. Costs are to be calculated using a 4 recognized quality cost heads. What are the 4 quality cost heads? Preventive, appraisal, internal failure cost and external failure cost. We have to prepare a table of expected quality cost, first one. So expected quality cost. We have to prepare in both the situations, in current situation and in proposed scheme, so that only we will get to know how much this became profitable. What are the costs? Preventive, appraisal, internal failure cost, external failure cost. We have to bifurcate among them. So, but they did not give which is the preventive cost, which is the internal failure cost, all that they haven't given. But we know only two in the new scheme, this 4,50,000 and this 50,000. 4,50,000 is for quality training purpose, means it is a preventive cost. Next, 50,000 is to avail the quality control consultant to annual charge. This will reduce the percentage of faulty items delivered to the customers. It is an appraisal cost. Why we have included it in a appraisal cost? Because it is during the process, no, they were trying to reduce the percentage of faulty items delivered to customers. They were stopping to quote the faulty products to customers, and it is not an internal failure cost. It is not because of internal failures. So we have included the same in appraisal cost, and rest of the cost we have to find out. Okay, so prepare. We have to find out external failure cost, internal failure cost separately. So first find the external failure cost. In current situation and in proposed situation. See, we are coming from the reverse end, because we need 28,000 of demand, and they gave in reverse in how much products delivered will be replaced, and how much products produced will be defaulted, and how much products purchased will be defective. Okay, they give in reverse scenario, so we have to calculate like that only. So now consider customers demand. 28,000 in both the situations, it is 28,000. Now how many goods are replaced 12.5% of goods. Means in 100, 12.5% of goods are replaced. Means how many are good goods? 100 minus 12.5% means 87.5% are quality products. To reach 100, so this 28,000 represents only 12.5 per 87.5%. So how many will be actual dispatched to the customers? Why we need that? We have incurred cost for actual number of goods dispatched to the customers. No, how many accepted by customers we are not concerned with. We have to calculate the total cost incurred for production. So calculate the number of goods delivered to customers. So if 28,000 is the accepted goods and it is only 87.5%. So how much is, see how I written this? If 100% is 28,000, 100 is, sorry, 100 is 87.5% means just a minute. Only 87.5% goods are accepted. This will result in 28,000 goods. Means how much 100% goods we have to find out. 100 into 28,000 divided by 87.5. Okay, this will be the 28,000 divided by 87.5 into 100. 32,000 goods are produced. In proposed scheme, how much it is reduced to? See, it would reduce the percentage of faulty items delivered to customer to 9.5%. In current situation, it is 12.5% and it will be reduced to 9.5%. The second point. Okay, means in 100, 9.5 are good, means 9.5 are written, means 90.5 are good. So 28,000 represents the 90.5% of goods. Means how many they might have produced? 30,000, 939 means 28,000 divided by 90.5%. Next, this is the total number of goods produced. So how many are replaced? 32,000 minus 28,000, 4,000. 30,000, 939 minus 28,000, 2,939. These many goods are replaced. If they have replaced these many goods, what are the costs we have incurred to replace that? Okay, this will become the external. See, any cost incurred for replacement will be the external failure cost, no? So cost of goods replaced. For each one we have to calculate. So what will be the cost if some product is replaced? What is the total cost increased in that? 35 rupees of direct material, direct labor 25 rupees, and variable overheads 15 rupees, and selling price of 90 rupees. So sorry, selling price, this is not the cost, no, these three costs. Along with these costs, they told in the first point that cost of delivering the replacement item is 5 per unit. So in order to deliver the replacement item, we are incurring extra cost of 5 rupees. We will include that replacement cost in these defects only. So 35 plus 25 plus 15 plus 5. All these 80 rupees we will charge it to the defective products, because they are defective. We have incurred the external failure cost. So 4,000 into 80 rupees, 3,20,000. Next 2,939 into 80 rupees, 2,35,120. So finally we have arrived at external failure cost. So 3,20,000, 2,35,120. Next we need to find the internal failure cost. So same in current scenario, in proposed scenario. So what is the internal failure cost here? See, if the goods, see first one what they have given, customer rejected some goods and we have to replace that. It is the after going to customer. So it is the external failure cost. Next one, 20% of goods are produced are waste products, then faulty goods. So this will be the internal failure cost. So how many goods are produced first of all? For 32,000 goods, 32,000 goods are delivered. This is 80% only. 80% equal to 32,000. Why it is 80%? Because another 20% is found fault in while they produce goods. No, so only 80,000 is delivered to the customers. So what does 100% cost? What is the amount? 32,000 divided by 80 into 100. 40,000 goods they have produced. 40,000 goods. How we got that? 32,000 into 100 divided by 80. And what is it reduced to? Here in the first point they have what they have told, faulty level of production is reduced to 10%, means now only 90% will equal to 30.939. 30,939. These are the good qualities. So what about 100%? What they have produced? 30,939 divided by 90%. 34,377. This is the amount they have produced. What is the cost they have incurred for that? See, we have to calculate the cost for only extra products which have rejected in the production. So 40,000 minus 32,000 will be 8,000. These are the rejected goods. Next, 34,377 minus 30,939. 3,438 are rejected in current scenario. What is the cost per good? We have incurred a material cost of 35 rupees and labor cost of 25 rupees plus variable overheads of 15 rupees. Should we include the transportation cost? No, because they were rejected before going to customer itself. Means they have not transported yet, no. So we don't need to consider that cost. 35 plus 25 plus 15 into 8,000, 6 lakhs. This is the internal failure cost in current situation. Now 35 plus 25 plus 15 into 3438, 2,57,850 rupees. This is the internal failure cost. And one more point is that this is not alone. There is some other cost here. See, 10% of direct material will be scrapped due to damage while in storage. Scrap is internal failure cost. Okay. So we have to include that in 10% of direct material will be scrapped. So we have to include that where in internal failure cost. Scrap is the internal failure cost, no? So we have to include in internal failure cost. 10% is scrapped. means how much is actually produced? 40,000. So 40,000 is related to only 90%. Sorry. 90% of the raw material is related to 40,000, which is good. Means 100% we have purchased, no? What is the cost of 100%? 40,000 into 100 by 90. This is the actual goods we have purchased. Actual purchases. In current scenario, 34,377 divided by 90 into 100. 38,196.67. Then how much purchases wasted? The scrapped goods means 10% of the actual purchases. Means in this 10%, 4,444. In this 10% means 3,819.767. This much purchases got wasted. So here what is the cost per unit? 35, because only purchases are directly stored and scrapped, no. So only 35 will be the cost we have lost. 4,444 into 35 rupees, 1,55,540, and 3819.67 into 35, 1,33,688. Okay, so we have to calculate here 0.44 also. So 4,444.44 into 35 in the sense 1,55,556. This is also internal cost. What is the internal cost? 6 lakhs plus 1,55,555 means 7,55,556. Next. 2,57,850 plus 1,33,688. 3,91,000. 3,91,538. So now find out what is the total cost of quality in current scenario and proposed scenario. See, we got here so 10,75,556. They have given in the question only, know what is the total cost incurred in the current scenario. Next, proposed scenario 4,50,000 plus 50,000 plus 3,91,538 plus 2,35,120. 11,26,658. See, this is more than in current situation. We are incurring more cost when compared to the proposed situation. So actually they have asked you to calculate the total cost in current and proposed scenario. We have calculated that. Now read the second question. Would you recommend the proposal? Give financial and non-financial reasons. See, in financial perspective, this is not good to follow this approach. But when we go to non-financial perspective, there is a lot of cost saving in internal control and some cost in external control. See, because of this we can save some resources and we can save some customers from see, if customers giving back on products, our reputation will be reduced. So if we think a non financial perspective, we need to follow this approach, and in future it may we may reduce the cost, because all the training costs will not be incurred in future, no, again and again. So in future it might be reduced, but now it is not beneficial, even though some companies may follow that if they prefer more on financial perspective, and it is suggestible to follow based on non-financial perspective. That's it. Next question. Coming to the fifth question, Cool Air Private Limited manufactures electronic components for cars. Car manufacturers are the primary customers of these products. Raw materials components are bought, assembled, and electronic cars components are sold to the customers. Till here they have said about their business. Market demand for these components is 5 lakhs units per annum. Cool Air has a market share of 1 lakh units per annum, that is 20% market share for its products. Below are some of the details relating to the product. Selling price, raw material, assembling and machine cost, delivery cost, and finally contribution. If you reduce all these to 2500 minus all these cost, you will get 1000 per unit. Customers due to defects in product return 5000 units each year. So how many returns per annum? 5000. This is external failure cost. They are replaced free of charge by Cool Air. The replaced components cannot be repaired and do not have any scrap value. Okay, they are replaced free of cost, it seems. So they are bearing that charge, the delivery cost. They are bearing that replacement cost, it seems, and replaced components cannot be repaired and do not have any scrap value, so they are of waste money. If these defective components had not been supplied, then it had the sales returns due to defective units being nil. Customers perception about the quality of product would improve. Okay, if there are no defective products, then there would be no returns, and in customers perspective also quality will improve. This will yield 10% increase in market share for Cool Air. Okay, because of this defective products they are losing this 10% market share, it seems. That is the demand for the product that could increase to 1,50,000 units per annum. Okay, so as of now 1 lakh units of products are sold, but if there are no defective units, there will be 1,50,000 units sold demand for these products. Okay, they are losing some market share, it seems, because of this. So what they are asking, analyze the cost of poor quality per annum due to supply of defective items to the customers. Okay, they are asking only cost of poor quality. Actually there is they have given details of cost of poor quality only, so they were asking that only. So first, what are the cost? First 5,000 units they are replacing. So for replacing, how much will it cost for them? Total 900 plus 500. Total cost they will incur. No, for again they have to deliver. Again they need raw material, assembling cost, everything they need. So 1500 per product will be for replacing only. 1500 into 5000 equal to 75 lakhs. This is one cost, and in first question this is A. B. What is the other cost they are having? Loss of market share. So how much is the how many units they are losing? 50,000 units. Okay, here they have given no, now it is 1 lakh. If there are no defective products, it will be 1,50,000. Means 50,000 they are losing. And how much loss it will be? 1,000 contribution they are losing for each 50,000 units. So 50,000 into 1000 per unit, that will be 50,000 into 1000, 5 crores. So total 5 crores 75 lakhs they were losing. Next. Second question. The company management is considering a proposal to implement an inspection process immediately before delivery of products to the customers. So they want to inspect, it seems. So they are having many raw material defective products now. So they want to inspect, it seems, before delivery to the customers. Means they were already produced. Before delivery to the customers, they will be inspecting the goods. This will ensure nil sales returns. Okay, all these 5,000 units are there. No, this will be detected in before delivery to the customers only. So they will not have any sales returns. So what will happen then? They will not have. They will market share will increase to 1,50,000. They told here, no, if there are no sales returns, market share will increase by 10% and they will get a demand of 1,50,000 per annum. So they will ensure nil sales returns. The cost of having such a facility will be 2 crore per annum. This would include materials and equipment for quality check, overhead and utility, salaries to quality control inspectors, etc. All cost include, it will take 2 crore to inspect that one. Analyze the net benefit, if any, to the company if it implements this proposal. Okay, what is the benefit that will arrive if they incur this one? First one, this lost sales will be there, no, 5 crores lost contribution. This they will not incur. Here 1 2 0 5 crores plus for 50,000 units they will not incur this extra delivery cost again for sales return. Okay, 50,000 into 100, 50 lakhs, sorry, 5,000, because only 5,000 units are returned. So 5,000, for 5,000 goods they will not incur any delivery cost. So 5,000 into 100. Why they will not incur any delivery cost? Because they were not giving it to the customers only. No, they were not sending to the customers. So they are not incurring any delivery cost for that 5,000, because they were inspecting and they were detecting the defective products before delivery to the customers. So they were not delivering and they will not incur delivery cost. So all these 5 lakhs amount also they will sell, they will save. And this is the total profit they will get. But what is the cost? 2 crores. Three lakh 5,000. Is this the correct amount? No. They have to, they are, see, they were not incurring this 100 per unit, but they have manufactured this 5,000, sorry, they have manufactured extra 50,000 units. In that, how many defective products will be there? For 1 lakh there will be 5,000 defective products. For 50,000, extra 50,000 they were getting demand, no. So in that 50,000, how many defective products will be there? 50,000 into 5,000 divided by 1 lakh. 50,000 into 5,000 divided by 1 lakh means 2,500 defective products they will be producing. So for that defective products, how much extra cost they will be incurring? Raw material cost, assembly cost. They will not incur in delivery cost now, because they will not deliver it now, because of the inspection. They will detect it in the prior itself before delivery to the customers, and they will save that cost. So extra cost, how much they are incurring? 900 plus 500 means 1,400. 2500 into 1400 means 35 lakhs. So deduct 35 lakhs from this. 3 crore 5 lakhs minus 35 lakhs. 2 crore 70 lakhs. See, up to here it is easy to remember, but we will forget this 35 lakhs. Keep it in mind, because of this extra production we will incur some defective, we will produce some defective goods, and we will detect some, we will incur some production cost, but we will not incur delivery cost because we are not delivering it to the customers. Okay. Next, quality control investigations reveal that defective production is entirely on account of inferior quality raw material components procured from large base of 30 suppliers. Okay, why they were incurring this, they were producing this defective products 2500, 5000, all that, because they were getting some inferior quality raw material, poor quality raw material. Currently there is no inspection at the procurement stage to check the quality of these materials. Okay, the management has proposal to have inspectors check the quality control at procurement stage itself. Any defective raw material components will be replaced free of cost by the supplier. Okay, if they detect some raw material defective one, they will return it to the customer supplier, and they will get another product in the place of this, and they will not going to incur any charges for the exchange. This will ensure that no product produced by Cool Air is defective. The cost of inspection of quality control would be 4 crore per annum. Okay, they will incur some 4 crores for that quality check of raw materials. Analyze the net benefit to the company if it implement this proposal. Please note that scenarios in question 2 and are independent and not related to each other. So we should not consider this. We should consider the plain case discussed earlier, and we should check whether this 4 crore investment in inspection is beneficial or not. So if see, this is the cost they were incurring, but what will be the benefit they will receive if they invest in if they invest in 4 crores? One, obviously this 50,000 rupee, 50,000 extra units ka cost lost contribution. Okay, see here they were, because of these units, they were, because of the current proposal they were incurring 5 crore 75 lakhs. This one only they will save, no, 5 crore 75 lakhs will be their income. And how much they were incurring? 4 crores for the proposal, means 1 crore 75 lakhs will be profit. Okay, simple, because they told to avoid second question, and they were asking what if they incur for 4 crores for the first question only. See, in the first question they were incurring a cost of poor quality of 5 crore 75 lakhs. If they have incurred in preventive cost of 4 crore, they will select, they will earn, they will save a profit of 1 crore 75 lakhs. What are these 75 lakhs and 5 crore? One is lost contribution, one is cost of defective goods. Between the inspection at the end of process and inspection at the raw material procurement stage, advise a better proposal to implement in terms of profitability and in terms of long term perspective. Okay. See, in the first scenario, 2 crore 75 lakhs. If they do inspection after production, but before delivery to the customer, they can save 2 crore 70 lakhs. But in second situation, that is they inspect at raw material stage only, they will save 1 crore 75 lakhs. Obviously from profitable point of view, which is better? 2 crore 75 lakhs. Okay, this is the first answer. In profitable point of view, inspection after the production before delivery to the customers is beneficial, but in long term perspective, in non profitable perspective, inspection at raw material procurement stage will be beneficial. Okay, there will not be any loss of raw material. Okay, this will be good instance in long term perspective. Next question. EKS Limited manufactures a single product which requires 3 components. The company purchases one of the components from 3 suppliers: DE Limited, PE Limited and ZD Limited. The following are information available. See, for EKS Limited, they need from raw material which is supplied by 3 products. I am summarizing it. Okay. For EKS Limited, they need 3 products. From one of the product has 3 customers, 3 suppliers. That's the total story. The price quoted by supplier means for each of the supplier per 100 units they are charging. One is 240, 234 and 260. But percentage of defects, if the purchase from DE Limited is 3%, for PE Limited is 5%, ZD Limited is 2%. The defectives are not detected. If defectives are not detected, they are utilized in production, causing a damage of 200 per 100 units of component. Okay, 200 per 100 units of component. The total requirements are 12,000 units of components. The company intends to introduce a system of inspection of components on receipt. So as of now, they were incurring 200 per unit. So they want to inspect the component on receipt only. The inspection is estimated to 26 per 100 units of components. Such as inspection will be able to detect only 90% of defective components received. No payment will made for components found to be defective in inspection. Okay, this is see it will cost 26 per 100 units it seems, but it can only detect 90% of total defectives. Means only previously if they are detecting, if they have 100 defective products, in that only 90 means 90 goods will be detected, 10% again they will not detect, and if whatever goods they were detected, they need not pay any payment for them. So we have to advise whether inspection at the point of receipt is justified or not. First, see, this is a cost criteria. We have to check whether it is profitable or not. So first, if they do not inspect, means if they do not inspect from DE Limited, PE Limited and ZD Limited, how many units they need? 12,000 units. How many will be defected in that? 12,000 into 3%, 360. 12,000 into 5%, 600. 12,000 into 2%, 240. So this is the defective goods. Now they will incur 2 costs here. One is defective cost. How much? 200 per 100 units of component means 360 into 200 divided by 100. Okay, see, for 100 units it will be 200. For 360 units, how much? 360 into 200 by 100. It 720 rupees. Same way, 600 into 200 by 100, 1200. 240 into 200 divided by 100. 480 rupees. So one is defective cost. We have to find total cost per unit, then only we can find out which is beneficial. So one is they will incur defective cost and another they will incur some purchase cost to purchase that. No, so purchase cost, how much they will incur for 240, for 100 units 240, for 12,000 units how much, 12,000 into 240 by 100, 28,800. Next, 12,000 into 234 by 100, 28,080. 260 into 12,000 by 100, 31,200. You understood? No. For every 100, first one is this one. For every 100 units for PE Limited, they will cost 234. For 12,000 units, how much? Cross multiplication. For 100 units, ZD Limited will cost 260. Then for 12,000, how much? Cross multiplication. 260 into 12,000 divided by 100. You will arrive at 31,200. This is the cost, total cost. Add that one. 720 plus 28,800. 29,520. 1200 plus 28,080. 29,280. 31,200 plus 480. 31,680. So for how many goods they are incurring this one? For 29,520 for 12,000 goods, but they need to charge this only to the good products, because for bad products they will not receive any payment. Okay, they cannot sell them. So how can they charge that to bad cost? For only good cost they have to charge, means divided by 12,000 minus 360 will are the good cost, not 12,000 total units, 360 defective units. So after reducing 360, only 11,640 are good products. So 29,520 divided by 11,640, 2.53, sorry, 5361 per unit. This is per unit. For 100 units, 253.61. Just multiply with 2.5361 into 100, 253.61. Okay. Next, for 29,280, for how many goods we need to charge that? 12,000 minus 600, 11,400. So 29,280 minus 11,400, 29,280 divided by 11,400, 2.5684. For 100 units, 256.84. Next, in third case, how many good products? 12,000 minus 240, 11,760. So for 31,680 divided by 11,760, 2.6939. This is for 1 unit. For 100 units, 269.39. Okay. So this is if they have after inspection cost, sorry, if they do not inspect, this will be the cost. What if they have inspected? Inspection taken place. So see, according to the question, what are the benefits? One is they can return the defective goods identified, means 90% of the defective goods will be returned. Means how many defective goods here in each of the case? 360, 600, 240, no? 360, 600, 240. In that 90% will be 10% will be 36. So 360 minus 36 will be 324. These are first is good products they have returned. For this they have to incur defective cost 36. In this also 540 will be the good goods they will be returned and replaced, and 60 goods will be the bad products which they will incur the cost. In third case 240 minus 24, 216 will be the good products bad products which are identified and returned, and only 24 products will be incurring the defective cost. So 36 into 200 by 100. What is this 72 loss due to defective products? 60 into 200 by 100, 120 here. 24 into 200 by 100, 48 in the third case. This is one cost. Second cost, they will incur 26 per 100 units. No. For how? On which we need to calculate that 26? On 12. See, they need to verify 12,000 units. So 12,000 units into 26 by 100. For 100 units, they will incur 26. So for 12,000 units, how much? In each case, they will verify 12,000 units and they will get to know what are the defective products. So 12,000 into 26 by 100. So in each case 3120 they will incur for inspection cost. Next, purchase price. For how many goods they need to pay the purchase price? In 12,000, how many goods? They need not pay for this, no. So 12,000 minus this good goods they need to minus. For this anyway they have to pay. So 12,000 minus 324. For 11,676 goods they need to pay the purchase price. How much? How much is the purchase price? We will go up and see. 240, 234 and 260. So 11,676 into 240 by 100. 28,022.4. Same way, from in 12,000, 540 are good goods for which they need not, defective goods for which they need not pay the purchase amount. So 12,000 minus 540, 11,460. For 11,460, 234 divided by 100, 26,816.4. Next, 12,000 minus 216, 11,784 into 260 by 100, 30,638.4. Add all the cost. 638.30.6 30,638.4 plus 3120 plus 48, 33,806.4. Next, 120 plus 3120 plus 26,816.4, 30,056.4. 72 plus 3120 plus 28022.4, 31,214.4. See, this is the total cost they have incurred, but for how many goods they have to charge that one? Only for good products. Means what we have to minus here? Both, because both are defective only. No, some they have identified, some they did not identify, but anyway both are defective and waste of money. So we cannot charge it for that. We have to charge only to 12,000 minus 360, 11,640. Same like above situation, 12,000 minus 600, 11,400, and 12,000 minus 240, which is 11,760. So if you divide and if you divide, you will get per unit, but you have to find out per 100 units. So divide by 12, this A divided by B into 100 we have to find out. 31,214.4 divided by 11,640 into 100, 268.16. That 30056.4 divided by 11,400 into 100, 263.65. 33,806.4 divided by 11,760 into 100, 287.47. So we have find out this all, and we need, the finding is not a big problem, but we should suggest which is better. So compare 268.16 here, after say if we inspect 255.61. This is before inspect. If we do not if we do not inspect, we will incur 253.61. But if we inspect, we will incur 268.16. This is costly. Inspection is costly. Here 263.65. Here 253.84. This is again, inspection is costly. In the last scenario, 269.39 and 287.47. So in all the three cases, inspected goods are costly. So in profit point of view, in financial perspective, it is not economical to inspect the goods, but if they consider some qualitative aspect, long term perspective, inspection is suggested. Okay. Next, what they are asking for second question? Which of the three suppliers should be asked to supply? So we have two perspectives here. No, if we inspect, if we do not inspect. First, let's consider if they do not inspect. Means in this if they do not inspect, from means in this situation, 253.61, 256.84 and 269.39. So in the first situation, first person, that is DE Limited, is cheaper if we do not inspect. But if we inspect, 268, 263, 263 is cheaper, means PE Limited is cheaper. So we can choose PE Limited if we opt for inspection. Next question, seventh question. Live Well Limited is manufacturing company that produces a wide range of consumer products for home consumption. Among the popular products are its energy efficient and environment friendly LED lamps. The company has quality control departments that monitors the quality production. So it is waste. As per the recent cost of poor quality report, current rejection rate of our LED lamps is 55% of the units input. 5,000 units of input go through the process every day. Each unit that is rejected will result in 200 loss to the company. The quality control department has proposed a few changes to inspection process that would enable every detection of defects. This would reduce the overall rejection rate from 5% to 3% of units input. The improved inspection process would cost the company 15,000 each day. So what happened? What they are telling here? They see for every for units of input there is a 5% of rejection rate and 200 per unit loss. So they want to adopt a new scheme which costs 15,000 per day. This will reduce the defective rate, rejection rate from 5% to 3%. So how much generally, what in the current scenario, what is the loss? See, first see the question, analyze the proposal and suggest if it would be beneficial for company to implement it. We have to check whether it is beneficial to implement it or not. First, what we should do, what is the cost incur? No, if we have 5% only, 5,000 of units, no, on that 5% means how many units? 5,000 into 5%, 250 units, and 200 per loss, per unit loss. 250 into 200 equal to 50,000. And if we adopt new policy, then what will be the cost? 5,000 into 3%, 5,000 into 3%, 150 into 200, 30,000 plus 15,000. See here, this is 15,000 is there, no? Because why 5% to 3% got reduced? Because of this 15,000. So we have to add that 15,000. So 45. Difference between these two. Why we are comparing that? They are asking whether it will be beneficial to implement the inspection or not. So if they inspect, they are incurring 45,000. If they do not inspect, they are incurring 50,000. So which is beneficial? Inspection only beneficial. Inspection. After implementation, analyze the maximum rejection rate beyond which proposal ceases to be beneficial. See what they are, first understand the question. See, now they given 3% is the rejection rate because adopting the new proposal. But if it is not given, how much rejection rate can be accepted? They were asking. Okay, how much they can be accepted till it becomes to 50,000. In current scenario, anyway, we are incurring 50,000. But beyond that, we will anyway not incur. So up to maximum 50,000, we can incur. So take X here. We don't know this. So 5,000 into X% into 200. That means, see here, 200 is there, no? If we multiply this, this will come. If we multiply that with 200 plus 15,000, how much maximum? 50,000. Okay, here 45,000 came because we know this 3%, but we don't know this, no. So maximum, how much can we incur here? 50,000. So 50,000. Then 5,000 into 200 into X% equal to 50,000 minus 15,000. So X% equal to 35,000, 50,000 minus 15,000 means 35,000 divided by 5,000 into 200. See, this is in terms of percentage. So we have to multiply here with 100. Then only we can get the percentage, no? So if we calculate this, we will get 3.5%. So this is the maximum rejection rate that can be acceptable. Anything beyond it is not bearable, tolerable. Okay, that's it. Next question. Question number 8. BTS Limited produces 3 products A, B, C. Following information is available for a period. Okay, contribution they have given 30, 25 and 15. Machine hours required for per unit of production. So they have given for machine 2, machine 1, machine 2 and machine 3, and they have given the products. 3 machines, 3 products are there, and how much each product is using the machine also they have given. Estimated sales demand for A, B, C is 500 units each, and machine capacity is limited to 6000 hours per each machine. Analyze the above information and apply the theory of constraints process to manage the constraints. How many units of each product will be made? So, what does the theory of constraints say? We should give priority to that product which have through to that machine which is limited, which is a constraint. We should use that maximum 100%, and we should produce that product using the scarcity machine which is more which gives more contribution. Okay, so importance to contribution, highest contribution per bottleneck resource. Okay, we should produce that. But what is the bottleneck resource? Here they have given 3, but see, machine 2 is utilizing maximum 200%, means machine 2 is the bottleneck resource. We have to find out this, how much is the bottleneck resource. See, here they have given a unit, A uses 15 hours per unit. See, they have per unit hours. So A requires 15 hours to produce 1 unit. So likewise B will use 3 hours to produce 1 unit, and C requires 6 hours to produce 1 unit. So how much if they need 500 of A, which requires 15 hours, plus 500 units of B. They have given here no 500 units requirement is there. So each unit requires 3 hours plus 500 into 6. Then 500 into 15 equal to 7500 plus 500 into 3 equal to 1500. 500 into 6 equal to 3000. 12,000 they need. But how much they have? Only 6,000. Okay. So by with this we have find no, this is a bottleneck resource. So we have to choose among the product which gives more yield. So calculate contribution per bottleneck resource. So A, B, C, what is the contribution? 30, 15, 25 and 15. So what is the contribution? 15, 3 and 6. This is 25, not 2 and 5. So contribution per bottleneck resource, 30 divided by 15, 2. 25 by 3, 8.33. 15 by 6, 2.5. So this is the contribution per bottleneck. We have to give the priority to the product which gives more contribution. So first priority to B, second priority to C, and third priority to A if anything remains. So using the 6,000 hours, here they have given each will have 6,000 hours. So first we will try to produce B. So each 500 units of B required, and each unit requires 3 hours of machine. So 1500. Next, see here I will write 6,000 are there. We have consumed 1500, means how much is left? 6,000 minus 1500, 4,500. Next, for C, next we need to give priority to C because it is giving second highest contribution. So 500 units of C requires 6 hours per unit, means 3,000. Okay, 3,000 they are using here. So rest 1500 remained. So 1500 we will use for this A. So using that 1500 hours, how many 1500 units? Sorry, 1500 hours. How many units can you produce? 1500 divided by each unit requires 15 hours. No. So only 100 units are produced. Here all the units 1500 divided by 3, 500 units can be produced, and in the C 3000 by 6 means 500 units, so they can also produced. Okay, this is the final answer. Next. ZPS manufactures surveillance camera equipment that are sold to various office establishments. The firm also installs the equipment at client place to ensure that it works properly. Each camera is sold for 2500 rupees and direct material cost is 1000 for each camera is the only variable cost. Okay, so 2500 selling price and 1000 is the material cost, which is the only variable cost. So 1500 is the contribution. All other costs are fixed. Below it is the information of manufacturing and installation of this equipment. Annual capacity camera units manufacture. See, they are giving about capacity maximum that can be produced by them or installed by them. How much they can produce maximum? 750 units. How much they can install? Maximum 500 units. And actual yearly production and installation is 500 units of manufacturing and 500 units of installation. The questions below are separate scenarios and are not related to each other. Identify the bottleneck in the operation cycle that ZPS would focus on improving. Give the reasons for your answer. See, they are asking about bottleneck. What is a bottleneck here? Manufacturing or production installation, what is it? See, manufacturing, they are having bulk manufacturing, annual capacity is more, but they are producing very less. See, but here installation, they can install only 500 units. Even if they produce 750 units also, they can install 500 units only. So this is the bottleneck resource. Installation is a bottleneck resource for them. An improvement in the installation technique would increase the number of installations to 550 camera units. This would involve additional expenditure of 40,000. Advise ZPS whether they should implement this technique or not. See what they are telling here, in order to, this is the bottleneck resource. To improve this installation, to improve this annual capacity, they need to incur 40,000 it seems. So that what will happen, they can install 550 units, means 50,000 extra units they can see here they have given increase the number of installations to 550. 2 means from 500 to 550, not more not extra 550 units, only 50 units will be the extra installation capacity if they incur 40,000 of annual expenditure. So they are telling whether it is profitable or not, they are asking. So how to calculate that? We can get 50 extra installations into 1500 per unit. We will get contribution for 1500 per unit, no? So multiply that, how much we will get? 50 into 1500, 75,000, minus how much we need to incur for that extra units? 40,000. So 35,000 will be the profit if we incur that expenditure. Okay, so it is profitable to incur the 40,000 expenditure. Engineers have identified ways to improve the manufacturing technique that would increase the production by 150 camera units. This would involve a cost of 100 per camera. See, they want to increase the production by 150 camera units. So this would cost 100 per camera unit due to the necessary changes in made in direct material. Advise ZPS whether they should implement this technique or not. They should not implement this technique first of all, because manufacturing increasing the capacity of manufacturing is not the criteria, because they have they can manufacture the goods if they want to. Even if they manufacture here 750 units or 650 units, what will it happen? It will be inventory for them, stock. they will create inventory and keep in the stores. It will cost more for them for carrying that inventory, because we can install only 500 units per annum. No, even if you produce more than that, it is not possible for us to install that one, because see here each of the cases independent. Don't relate it to second question that they are implementing to increase to 550 units. In the present in the third question, again we need to consider 500 units installation capacity only. So as the bottleneck resource is installation, increasing the annual capacity of manufacture does not make any sense. Will not get any profits unless otherwise we will be incurring more of expenditure for the same. Okay, that's all. Next question. DAC manufactures motor rotors in two operations, casting and bonding. Following information is furnished. Annual capacity for casting it is 75,000 units and for bonding 60,000 units. Annual production 60,000 units and 60,000 units. Fixed operating cost excluding direct materials 2 crore 40 lakhs, and for bonding it is 1 crore 50 lakhs. Fixed operating cost per unit produced is 400 and 250. How they have, how, see how they got this one 400 and 250? 2 crore 40 lakh divided by 60,000. Okay, per unit they have arrived at 400, and 1 crore 50 lakh divided by 60. How this is, they have given here, no? Same. So they have given total cost and per unit cost. Each motor rotor sells for 3,600 and direct material cost is 1,600 incurred at starting of casting operation. DAC has no other variable cost. DAC can sell whatever output is produces. Okay, see, selling is not a constraint for them. Demand is not a constraint. Whatever they produce, they can sell that one. The following requirements refer only to the preceding data. There is no connection between the requirements. Okay, they are asking this also independently. Now first find out the contribution. How much? 3,600 minus 1,600, 2,000. Okay, that one only we can find out with this. First question. DAC is considering using some modern jigs and tools in bonding operations that would increase annual bonding output to 750 units. By 750 units, the annual cost of these jigs and tools is 11 lakh 25,000. Should DAC acquire these tools? Show your calculations. See here, annual capacity of bonding is 60,000 units only, no? So this is like same in the previous question. This is the constraint for us, bottleneck resource for us. So they how they will increase this by 750 units. Keenly observe here, if it is by means they can produce extra 750 units. Okay, increase by 750 units means extra 750 units they can produce. So 750 units into how much contribution from each unit? 2,000. So what is the amount? 750 into 2,000 equal to 15 lakhs. How much they need to incur for to produce 750 units? 11 lakh 25,000. So if we reduce 11 lakh 25,000, 3 lakh 75,000 is the profit. If we incur that extra 11 lakh 25,000, so we can invest in that. It is profitable to invest in that. The production manager of casting department has submitted a proposal to do faster setups that would increase the annual capacity of casting department by 7,500 units and would cost 1,78,000, 1,87,500 per annum. Should DAC implement the change? Show your calculations. See, what is a bottleneck resource for us here? Bonding is a bottleneck resource, but here the capacity is given to increase casting. there is no benefit of improving the casting capacity. No, even though if it we increase and produce the production, they need to go through bonding department before selling. So if bonding capacity is only 60,000, there is a it is a waste to produce extra 7,500 units. Okay, so it should not be invested because it will not implement increase the bottleneck operation. It will further result in increasing inventory, which will increase the inventory carrying cost. Okay, so the proposal should not be accepted. We should not increase the capacity. An outside contractor offers to do the bonding operations for 9,000 units at a 500 per unit and double the 250 per unit. It is the it cost DAC to do the bonding in house. Should DAC accept the subcontractor's offer? Show your calculations. See, if we outsource this casting department, casting not bonding, outside contractor offers bonding operations for 9,000 units at 500 per unit. Actually it is costing 250 units per now, for us now, but what he said, we will do it for 500 units. So can we opt that or not? They are asking. See, bonding is the bottleneck resource. So in what they told, whatever they have produced they can sell it. So even if we should check whether investing 500 rupees for this extra 900 units is beneficial or not. How we can find out? If we sell 9,000 extra units, what is the uh, uh, contribution per unit? 2,000 rupees. Means 9,000 into 2,000, 1 crore 80 lakh unit rupees, minus what is the extra cost we are incurring? 500 per each unit, means 9,000 into 500. What is the amount? 45 lakhs. So what is the profit? 1 crore 80 lakhs minus 45 lakhs. 1 crore 35 lakhs. So should we outsource that one? Yes, it is profitable to outsource. Even if the cost is double, it is profitable situation. XYZ company offers to do casting process for 3,000 units. See, again they are telling about casting product. At 200 per unit, half the 400 per unit, the that is cost DAC to do casting process in house. Should DAC accept the XYZ company offers? Show your calculations. I'll show it in the question. See, now it is fixed cost per unit is 400 per unit. What they told, some subcontractor came and told that we give me only 200. I will incur the rest of the cost and I will give you the 3,000 units. Should we accept the proposal or not? It is a basic question that by incurring that extra, by giving the amount, half of the amount to subcontractor, this fixed cost will not be reduced. Anyway we need to incur that if we give to the subcontractor, that will be the extra cost for us. Okay, so we should not give it to the subcontractor. Next, assume DAC produces 1500 defective units at casting operation. What is the cost to DAC of defective items produced? Explain your answer briefly. First thing, at this stage they have produced 1500 defective products, it seems. So they are asking what is the loss for us. First loss, material cost. Okay, so 1500 into material cost. What is the cost? 1600. So what is the total amount? 1500 into 1600, 24 lakhs will be the cost. Will we have any loss of contribution? No, because we have another 15,000 units capacity. So anyway, we using that capacity, we can produce extra 1500 units and we can transfer it to the bonding department. So the only cost is cost of raw materials. So next question. Assume DAC produces 1500 defective units at bonding operation. What is the cost to DAC of defective items produced? Explain your answer. See, if it incurs defective goods at bonding operation, first one same like this above, material cost will be wasted. Next, contribution will also be lost because here we do not have extra capacity to produce that 1500 units. Okay, to replace that 1500 defective products, it is not having any capacity, so it will lose that contribution of 1500 goods. No, so 1500 into, what is the contribution calculated earlier? 2000. So what is the total answer? 1500 into 2000, 30 lakhs plus 24 lakhs. 54 lakhs is the answer. Next question. Rohini Steel Company produces 3 grades of steel: super, good and normal grade. Okay, each of these products has high demand in the market and company is able to sell as much as it can produce these products. So there is no capacity, there is no maximum demand for that. They can sell whatever they produce. The furnace operation is the bottleneck is the process. So they have a operation called furnace and it is a bottleneck resource. The company is running at 100% capacity. The company wants to improve its profitability. The variable conversion cost is 100 per process hour. Okay, it is not 100 per unit, it is 100 per process hour. So in order to calculate the variable cost, actual variable cost, we need to multiply this with processing hours per unit. Okay, the fixed cost is 48 lakhs. In addition, cost accountant was able to determine the following information about the 3 products: super, good, normal. Budgeted units produced is 6000, 6000, 6000. Total process hours per unit is 12, 12, 10. Here it is there no processing hours, 100 per process hour. So in order to get variable cost, we need to multiply this with this one. And furnace hours per unit 654. Unit selling price 3600, 3400 and 3000. Direct material cost 2100, 1900 and 1720. The furnace operation is a part of total process of each of these 3 products. Thus, furnace hours are part of process hours. Determine the unit contribution margin for each product. So, they just asked about the contribution for each product. How to calculate the contribution? Selling price minus variable cost. Here we have 2 kind of variable cost. One is variable conversion cost and material, direct material cost. Direct material, variable conversion cost. Okay, so we have to reduce both to get the answer: super, good and normal. So the selling price is 3600, 3400, 3000. Variable cost, direct material 2100, 1900 and 1720. Now variable conversion cost 100 per process hour. How many process hours we are having? 12, 12, 10. So 12 into 100, 12 into 100, 10 into 100. Okay, then what is the answer here? 1200, 1200 and 1000. So subtract both of these to get the contribution. 2100 minus 1200, 900, sorry, 3600 minus 2100 minus 1200, it is 300. 3400 minus 1900 minus 1200, 300. 3000 minus 1720 minus 1000, 280. So we got the first answer. Give the analysis to determine the relative product profitability assuming that furnace is a bottleneck. So what they are asking here, relative product profitability means contribution assuming that furnace is a bottleneck. It is nothing but contribution per bottleneck resource. So how to calculate that one? Contribution by bottleneck resource. Okay, so we should divide this by bottleneck resource means 654. So 300 by 6 is 50. 300 by 5 is 60. 280 by 4 is 70. Okay, this is the bottleneck contribution per bottleneck. What we find with this, we have they asked for analysis also. So what we should do with this, we should give priority of utilizing the bottleneck resource to the product which gives highest contribution, means first normal, second super, second one good, and third one super. In this way we need to give importance based on the ranking. Management wishes to improve the profitability of increasing prices on selected products. At what price would super and good grades need to offer in order to produce the same relative profitability per bottleneck hour as normal grade? So what they have decided, this super and good are giving low profits when compared to normal, no? So they want to earn same profit as normal is earning. For that what they need to they want to increase the selling price. So they are asking us what should be the price so that we can earn the same profit. So how to calculate that one? First, here answer, contribution per bottleneck resource should be equal to 70. Okay, what is the process of calculating that? How to calculate the contribution? 3000 selling price minus variable cost. So we don't know the selling price here. So x minus 2100 minus 1200 divided by 6. If we in the previous scenario, if we do that, we know, as we know the selling price, we have arrived at 50. But here we don't know the selling price, but we know the contribution what we want. So by doing by solving this, we can arrive the x means price. X equal to cross multiplication, take this to here, 6 into 70 means 420, and bring this minus to this. If you know the basic maths, you can understand. If you don't know, I am not your maths teacher. 420 plus 1200 plus 2100, 3720. This is the price they can select in order to earn the same contribution. And when coming to good, this is for super, and for good, x minus, what is the other variable and raw material cost for that? 1900, 1200. X minus 1900 minus 1200 divided by bottleneck resource 5 hours equal to how much they want? They also want 70. So x equal to 5 into 70 plus 1900 plus 1200. So 3450. If they charge 3450, they can earn the same contribution as what normal grade is earning. So that's all the answer. 14th question. ZED produces two types of products, Z and D, at its manufacturing plant. Both the products are producing using the same material, machinery and skilled labor. Machine hours available for the year is 4,000 hours. Okay. Information relating to products are as follows: selling price, material cost, machine hours, maximum annual demand, online booking already accepted for, due to poor productivity levels, late order and declining profits over the recent year. The CEO has suggested the introduction of throughput accounting in the company. The total of all factory cost is 1 crore 42 lakhs 60,000 excluding material. Using throughput accounting, prepare the statement to determine the optimum product mix and maximum product profit for that year. So what they are asking here, with using throughput we need to find, using throughput what we will find what that bottleneck resource can be used for to get the maximum profit. Okay, how we will decide that? The product which gives the highest contribution per bottleneck resource will be given importance first. So first we need to find contribution per bottleneck resource, and next we need to find a throughput accounting ratio. By using the throughput accounting ratio, we can find whether it is profitable to produce that particular product or not, because in contribution per limit for bottleneck resource, we will consider only material cost, and we need to incur many other costs, no, all that factory cost we will incur, no. After considering all that, what will be the profitable product, we should find out, and we should give priority to use the bottleneck resource for that. So first calculate contribution. First we need to find what is the bottleneck resource here. They have given only for machine hours, total machine hours available and machine hours per unit. So as they have annual demand of 2000 units, 2000 into 1.6 plus 1600 into 0.8. Calculate that one. 1.6 into 2000 plus 0.8 into 1600. 4480. But how much is the actual hours available? 4000. So a 480 shortage is there. So this is the bottleneck resource. So we have to first find out the contribution per bottleneck resource. How to calculate that one? First contribution. 16,000 minus 7,000. So I am not writing all the steps. I think you are well aware of how to calculate the contribution. So 9,000 and 4,000 minus 1,200. 2,800. Next. Bottleneck resource. What is the bottleneck resource? Have number of machine hours. So 1.6 and 0.8. So contribution per bottleneck resource will be 9,000 divided by 1.6. 5625. 2,800 divided by 0.8. 3,500. This is the bottleneck contribution per bottleneck resource. 5625. Divide it with factory cost per bottleneck resource. Means how to calculate that factory cost by bottleneck resource? Simple. 1 crore 42 lakh 60,000 divided by 4,000. 3565. Why we are dividing it with this one? We have to find out throughput accounting ratio. What is the throughput accounting ratio? Contribution per bottleneck resource by factory cost per bottleneck resource. With this we can find, is it profitable to produce that after incurring all the factory cost also, all the cost also. So 5625 divided by 3565. 1.58. 3500 divided by 3565. 0.98. So this is profitable only if TAR is more than 1, then Z is profitable, and the other is given importance only if we have extra hours after producing the Z. Okay, this is more profitable, Z is more profitable to produce. So what they have asked, optimum product mix and maximum profit for the year. They want product mix and profit for the year also. So how many units we can produce using that 4000 units of each product? 4000 hours are there. First we need to give importance to bookings already accepted. So 400 into 1.6, 640 minus 1200 into 0.8, 960. If we subtract this one, 4000 minus 640 minus 960, 2400. With this 2400, we need to calculate for other goods. What are the other goods? This 2000 demand and 1600 demand. As Z gives a more contribution, we need to find first Z. Z has 2000 to need 2000 units into 1.6 hours, means 3200 they need, but they have only 2400, no. So completely we need to give importance to Z, means how many we can produce? 2400 divided by 1.6, 1500 of Z. Z 15 for this 2400 we need for we should use for Z. So for Z, 2400 divided by 1.6 each unit, it can produce only 1500 units. They have asked to find the maximum profit. So how many? First 400 units of Z into what is the contribution we are earning from Z? 9000. So 36 lakhs. Next, for 1200 units, what is the contribution? 2800. 33,60,000 plus again 1500 units we are producing Z, no, for the 1500 into 9000, 1 crore 35 lakhs. So 1 crore 35 lakhs plus 33,60,000 plus 36 lakhs, 2 crore 4,60,000. This is the contribution. These are all contribution, no. So how to multiply? We need to reduce the factory cost to obtain the profit. What is the extra factory cost they given? 1 crore 42 lakhs 60,000 divided by, sorry, if we subtract that 2 crore 4,60,000 minus 1 crore 42 lakhs 60,000, we will arrive at 62 lakhs. Okay, this is the maximum profit that they can earn through this method. But there are 3 methods. See, this is the one method to calculate the profit. There are 2 more methods. How can we calculate that profit? Sorry, 2 methods. What is the second method? See, here we have taken contribution per actual contribution without considering any bottleneck resource. But we can also take throughput contribution. So contribution per bottleneck resource. This one is there, no? This one also we can take. So how to calculate with that, I will show you now. If we take that, we need to multiply that contribution, the products with hours they want. See, it is the, what is it? It is contribution per bottleneck resource. Okay, to multiply with contribution per bottleneck resource, we need have a bottleneck resource. So how much we are using that bottleneck resource, how much these are using that bottleneck resource. This 400 units, z of 400 units is using 1.6 hours of bottleneck resource into contribution per bottleneck resource. What is that? 5625, this much only, no? So 400 into 1.6 into 5625, 36 lakhs. We got the same answer. Just simply we are dividing that bottleneck resource here with 1.6, and we are multiplying here at 400. Why we did that means, if we take contribution for bottleneck resource, we need to calculate it with we need to consider bottleneck resource we are using. So same way, this is Z, no, this is D. 1200 into how much D is using, 0.8 into what is the bottleneck resource contribution, 3500. 1200 into 0.8 into 3500, 33 lakh 60,000. Again Z, 1500 into 0. See 1.6 into 5625. Again 1 crore 35 lakh, same 2 crore 4 lakh 60,000. Institute has given this method, but if you confuse, at least write this. This is good to remember, because they have given in institute, no, they will correct in like this only, like method 2 only. But if you could not, if you are got confused in exam to with what we should multiply with what, then at least do this. This we know, no, from the beginning we will multiply with the contribution, the number of units. So at least do this, you can get the same answer. Or else you can find you can check whether your answer is correct or not by cross verifying with method 1. Okay, that's why I told 2 methods. Next, calculate the amount of profit loss due to acceptance of online booking of products. See, why they are telling that we have lost something by online booking? Because according to that throughput accounting ratio, we need to first give preference to this Z. But because of pre-booking, we have already given importance to 1200 units. Okay, so that we are losing here some units. We have demand of 2000 units, but we produced only 1500 units. No, see here, only 1500 units produced because of lack of machine hours. So how much we have lost, they are asking. So simply how to calculate that? If we will not give that importance, what will be the profit? First find out that one. So what will the profit? 2000 units into 9,000, no, contribution for Z it is. So 2000 units we must have produced. How much 2000 units required? 2000 into 1.6, 3200. We have 4000 machine hours. In that, if we produce 2000 units, we require 2000 into 1.6 means 3200 machine hours. We have 800 more. So divide it. If we use 800 machine hours for D, how many units we can produce? Divide this with a number of hours required for each unit. 800 by 0.8, 1000. So this will be the product mix if we do not have any pre-bookings. So 2000 into 9000, no, contribution. So 2000 into 9000, 1 crore 80 lakh plus contribution of D, 1000 units we must have produced, and what is the contribution? 2800. So 1000 into 2800, 28 lakh. Add that one, 2 crore 8 lakh. Now reduce factory cost, 1 crore 42 lakh 60,000. 65 lakh 40,000, we must have got the profit. But here what is the profit? 62 lakhs. So reduce the, see the difference of that. What is the 65, 62 lakhs? 3 lakh 40,000. Okay, understood. Using the pre-book, if there are pre-booking, we have earned 62 lakhs. If there are no such pre-bookings, we must have given important to Z and we must have earned 65 lakh 40,000. So the difference between both of these actual and expected. So 3 lakh 40,000 is the lost profit because of pre-bookings. Okay, next question. Recommend the option to be followed in order to avoid any such loss of profit. So what we should do to avoid any such losses? First thing, now only we have calculated some loss due to giving priority to online customers. So in order to avoid such loss, give priority to Z because it is giving high throughput accounting ratio, no? So prioritize Z, and they have scarcity of machine hours, so they can outsource that part. Outsource, they can produce only 1000 units here, but the actual demand is 1600 units. So rest of that they can outsource and they can earn profits from that. And one more option is for D. For D, throughput accounting ratio is less than 1. So we should try to increase that to more than 1. How can we increase? To increase that, we need to increase the contribution. Means what we should do? We can increase the selling price. We can decrease the raw material cost. And or else we should increase the number of units efficiency. We should increase the efficiency to increase the number of units, or else we should increase the bottleneck resource capacity of that bottleneck resource. Anything we can do to increase to avoid the loss. And list the various ways through which price customization can be done. Okay, see, charging same price to every person may not be may not give the profits. If we give price customizations, it may be profitable for us, like offering more discount for regular customers. Okay, giving that coupons, they'll visit again and again, and based it on the product. Means for, see, for a Geo, anything for recharges, for 1 month plan there is one charge, 2 months, means different product customizations are available. Or else for a 1 GB pen drive, or 2 GB pen drive, or 36 GB pen drive, 32 I think, they have different charges. Means offering more products differentiations, we can earn the profit. Or else based on the demographics, like giving discounts to the persons based on their age factor, like senior citizens. Like once Wonderla has given given a free ticket for those people who showed their 10th hall ticket. So by giving the free ticket to that person, so every person who cleared the 10th class or who is studying the 10th class will try to go, but he alone can't go, no, he'll take few of his cousins or friends with him, so they can encash that amount. So in that way they can give discounts to one person which earns profits, which will give profits to them. And Time difference. I think I have told this in first only. No, I haven't told. So time difference. If we take 1 month subscription, there will be one charge, or if we take 6 months subscription, there will be another charge. Like that, if we give more offers, it will be beneficial for customers as well as the suppliers. Given that product Z and D are respectively in maturity stage and introduction stage of their life cycle, state the most appropriate pricing policy that could be followed by Z for Z and D as per their life cycle. Actually, we have the charge to decide the pricing in pricing decision. So as they are asking to tell now, I'll give a brief explanation only for Z and D, not completely. So Z, what they said, Z is in maturity position. So if anyone is at maturity position, they will have high amount of sales and high amount of rivals also. Even if they have produced a new product, there some rivals will be might have copied that product and they might have entered the market by the maturity time. So at this stage it is very risky for them to increase the price. So what they should do, they should maintain the constant price to sustain in the market, okay, at maturity stage. For see, if it is a skimming strategy, it is a different scenario. They need to maintain a constant price. But if it is a low cost strategy, see, firstly they have introduced a very low price when going into the market. But if they maintain that price, they will incur losses, heavy losses. So to recover all the costs they have incurred, they need to increase the price, but make sure it should be less than rivals. You can take Jio as an example for this, because they have adopted a low cost strategy to enter the market, but later on they increase the price, but still they are maintaining low price when compared to Airtel. So they can have any of the two strategies. First we need to check whether the that product is a innovative product or it's a normal product. Based on that we can decide whether it is skimming strategy or low cost strategy, and we should decide whether we need to keep the price constant or we should increase. Second one, for D is at introduction stage. So in that introduction stage we need to decide firstly whether it is a low cost strategy or skimming strategy. Means they have adopted any new technology, superior information, and they have produced a qualitative product. So depending on that we will decide the price. So in low cost strategy we will anyway charge a low price when compared to anyone in the market. But if we are using a skimming strategy, we need to charge high price. Okay, based on strategies, we need to charge the price. Okay, so that's the end of the question. Next question, 15th question. Tasty Food Court is renowned local name all ages of foodies for authentic taste and aroma. TFC has two divisions, Bake Studio and Hot Serve. Both the divisions are working independently in two different kitchens of same hall building. Okay, Mr. Palej and her daughter Avni manages the business, whereas son Subodh, who is chartered accountant by profession, also support the business with the management consultancy. So they have two divisions as of now. That is only important. Bake Studio and Hot Serve. Bake Studio division produces cupcake, Cupcake is baked in specially designed ovens, and owing to lack of ovens and space in the same, oven machines are considered as bottleneck resource. So what is the bottleneck resource here? Oven machines. Each cake requires 0.3 oven hours if oven is at 350 degrees Celsius. 500 oven hours are available as of now for them. Each cupcake is sold for 30 and direct material is sold for 15. All other cost of operating ovens is 22,500. All other cost in the sense fixed cost, factory cost is 22,500. Hot serve runs like uh, cave with reading facility and produces only two products on alternate day basis, hot chocolate and latte, which passes through two process, beating and preparing. There is one chef and one helper apart from three waiters. Miss Avni herself manages the counter. Cave start at 10 a.m. in the morning and remains until 8 in the evening. Idea is to customer focus. Each cup of coffee is prepared separately at order and is according with specification. Okay. Next, requirement of time for each unit is expressing in matrix below. Okay. One day they are using hot chocolate and one day they are producing latte. So for hot chocolate they need to beat for 9.5 minutes and they need to prepare for 9 minutes. For latte 7.5 minutes and 6.8 minutes. Beating and preparation process witness average downtime of 1.5 hours and 2.5 hours respectively on account of lunch hour of helper and chef and requisite cleaning of kitchen to maintain hygienic. So because of this there is a downtime for lunch hour and cleaning the kitchen. Cost and revenue for each of the unit of hot chocolate and latte are given below. Direct material, direct labor, variable overheads, absorb fixed cost, total cost and selling price. TFC recently adopted a backflush accounting system in raw material inventory control accounting and throughput accounting system on Subha's advice. Describe the features which distinguishes backflush accounting from another system. So they have implemented backflush accounting, it seems. So where they are asking how it is different from other system. First, we need to know what will backflush accounting say and where we will study this in lean system under just-in-time model. So I will tell briefly what does it mean. So backflush accounting means we don't record each and every transaction simultaneously. We will postpone the transactions and we will record at particular point of time only. So what will it have? It will save the cost and time. Like no one will be constantly sitting all the day to record all the transactions whenever we buy, because in just in time accounting we buy very frequently, no. So whenever the order comes it will automatically intimate to the buyer about the units it require, raw material it require, and buyer will send it and will charge for that. But it is not good for a single person to sit constantly there to see whether the order is coming or not and recording that. It's just waste of time. But after any intervals, like in the evening or at the end of the week or at the end of the month or 2 weeks once, in that way they should select one particular point of them where they need to account it and pay the bill for them. This will save the cost and time. Okay, this is the benefit in the backflush accounting. They can delay the entries and save the cost and time. Compute the cupcakes throughput accounting ratio and interpret the results. So they are asking about cupcake. Here they have given about cupcake. No, what they have given, we need to find out the throughput accounting ratio. How to find out that one? Contribution per bottleneck divided by factory cost per bottleneck. So contribution, we need to find out contribution per bottleneck. Contribution means they have given what 30 is the sales price and direct material cost is 15 rupees. So 30 minus 15. 15 is the contribution. Contribution per bottleneck. How much it will take for to produce one cupcake? 0.3 oven hours. Oven is the bottleneck resource, no? It requires 0.3 oven hours to produce. 15 by 0.3. So what is the answer? 15 by 0.3? 50. And we need to find out factory cost per bottleneck. 22,500 is the factory cost and bottleneck is for 500 oven hours. So 22,500 divided by 500, 45. So what is the throughput accounting ratio? Contribution per bottleneck hour divided by factory cost per bottleneck. 50 by 45. 1.11. So it is more than 1. Then what is the answer? It is beneficial to produce cupcake. If the maximum possible sale in a day for hot chocolate and latte is 50 and 62 cups respectively, then prepare the daily production plan that would maximize the contribution. Use both throughput and traditional approaches. So what is the difference between throughput and the traditional approaches? Throughput considers only material as a variable cost, but in traditional approach we have other variable cost also like labor, all that. Okay, we consider all that to calculate the contribution. That's the only difference. By once we need to consider only material cost and we need to find out the maximum contribution. And in the second case, we need to consider all the variable cost. So first, before everything, we need to calculate the maximum time required for each process, available for each process. For beating process, how much time is available? See, total they were working from where it is given, some morning 10 o'clock here. Morning 10 o'clock, 10 a.m. to evening 8 p.m. means how many hours are there? 10 hours. Starting from 10 to 8, it is 10 hours. So 10 hours. If we calculate in minutes, 60 minutes each hour. So 600 minutes are there. But in that we have 1.5 hours of downtime for beating. Means 1.5 into 60. 90 minutes. So 600 minus 90 in the sense 5-10 minutes are available for beating. When coming to next preparing, 10 hours again 10 hours into 600 minutes means 60 minutes means 600 minutes minus 2.5 hours into 60 minutes 150 minutes 450 minutes. Okay, this is the maximum time available. Maximum time available for each process. But what is the maximum possible units we can produce in this product? For beating, 9.5 minutes means 510 divided by 9.5. 53.68 products we can produce. This is hot chocolate. But what about latte? In 5-10 minutes, we can produce, we need 7.5 for each unit, means 68 units it can produce. When coming to preparation, 450 divided by 9, 50 units. And when coming to Lati, 450 divided by 6.8, 66.176. So, what is the limiting factor here? Here in both the cases, beating is giving more output when compared to the preparing process. See, here 53.68, here only 50, and here 68 units, here only 66.176 units. Means it is not the constraint. What is the constraint? Preparing. Okay, it is a bottleneck resource, and we need to find the bottleneck contribution for preparing units only. So, first consider throughput method and calculate the contribution. Selling price 180, and what is the material cost? 40 and 30. Here it is 50 and here it is 60. This is contribution. Contribution per bottleneck. What is the bottleneck resource here? Preparing. 9 minutes is 6.8 minutes. So 9, 6.8. Contribution per bottleneck. 60 by 9, 6.67, 6667, 50 by 6.8, 7.35, which is giving more contribution, Latte. And next, hot chocolate. So we should first produce latte and produce hot chocolate. So what will be the amount of how many units we can produce by using by giving importance to latte and next importance to hot chocolate. First we need to find the number of units. Latte requires 62 cups, means 62 into how many hours it requires? 6.8 minutes, 421. Okay, 421.6. By using 421.6 minutes, we can produce 62 cups here. Maximum will produce there. Rest of that we have to produce. We have to consider hot chocolate. So we total available hours are 450. We have calculated above. So in that, how many left? 450 minus 450 minus 421.6 means 28.4. Only this much time is left for us. In 28.4 minutes, how many units we can produce? 24.84 divided by 9. 9 is the time required for producing hot chocolate, no? So, only 3.155 means completely 3 units, 3 cups we can produce. Okay, this is the products mixer. 3 cups of hot chocolate and 62 cups of latte. So, what is the contribution? 3 into, I said to calculate the contribution, there are 2 methods. One is consider the contribution amount only, or else you can calculate the contribution per bottleneck. But what you should do for that? You need to multiply the bottleneck resource with units. Okay, see in method 1, consider only contribution, 3 cups into 60 units. It is 180. Again 62 cups into 50 units. How much it is? 62 into 50, 3100. So plus 180, 3280. It is a contribution. But as the second method, if we want to consider this contribution per bottleneck, 6.66 into number of units 3 into bottleneck resource we have to use. And for this 7.35 into 62 cups into 6.8. So 6.66 into 3 into 9 is the 179.82. 6.67 into 3 in 3 into 9. 180. 6.67. No? Next 7.35 into 62 into 6.8. 3098.76. So round figure 3100. Same answer. Extra here if we are considering the bottleneck contribution per bottleneck, here we need to take the bottleneck. If we take here bottleneck, then we no need for that bottleneck constraint. Okay, just remember that this is under throughput accounting. This is a product mix and profit 3280. Next, traditional method. We need to consider all the variable cost, means 100 here and 80 rupees is the selling price, minus material cost 40, labor cost 20, variable overheads 10. Here 30 material cost, 22 variable the labor cost, and 8 is the variable cost. 100 minus 40 minus 20 minus 10, 30. 80 minus 30 minus 22 minus 8, 20. And contribution per bottleneck, how much each unit is using? One is using 9, one is using 3.8. Sorry, 6.8, 9, 6.8. So contribution per bottleneck, 30 by 9, 3.33. 20 by 6.8, 2.94. So here we have to give priority to hot chocolate, second priority to lat. So hot chocolate we have to produce 50 units. Total available units is 450. In that, if we use 50 units, 50 into 9. So total 450 minutes is required for producing this hot chocolate only. We have left, we will not produce this anywhere. So what is the total profit here? In first method, 50 units into 30 is the contribution, 1500. Method 1. In second method, 50 into 3.33 into 9. Bottleneck constraint and contribution per bottleneck we are considering here. So 50 into 3.33 into 9. 1498.5. So round figure 1500. Same answer anyway. Okay. Here, which one? What is the maximum profit we got here? 3280. And here it is asking. It is telling to produce latte first and hot chocolate next. But in the traditional method, it is telling to produce hot chocolate first. So which method we have to choose? It depends on their individual perspective, whether they are considering only material cost as a variable cost or total variable cost they are considering. So based on the decision, they need to select one and they need to produce the maximum contribution units. Okay, next question. Cineworld is a movie theater is located in a town with many colleges and universities around it. Town has a substantial student population. Most of them are avid of movie goers. Business of Cineworld has been slow in the recent years due to the advent of a streaming website that show the latest popular movies online. However, management of Cineworld continue to feel students would still enjoy the watching movies on big screen along with facilities and ambience that only movie theater can offer. Accordingly, they have framed a plan to attract the students by offering the discounts and movies. So what they are telling here, they are in a place where there are many colleges and universities. Cineworld is a movie theater. It is surrounded by many colleges and universities. But there is a decrease in the people coming to theater because new websites and apps have emerged which will show the new movies online. so people have stopped coming to movie theaters. But there are still few people who like watching movies in theaters only. So they want to give some offers and discounts to on the tickets to attract the students. The average time a student spends in a college or university is 4 years. Oh, that's only no. So maximum any course will be for 4 years. What is the average duration of the which is the average duration of any course? For a nominal one-time subscription fee, Cineworld plans to offer students discounts on movie tickets for a period of 4 years. By attracting more football, Cineworld targets to cross cross sell its foods and beverages. This helped in sustain a reasonable revenue every year. Okay, side by side, besides the movie tickets, they want to sell the food and beverages and sovereigns also to get some extra money. So Cineworld would attract the attention to the plan by initially offering a free ticket, food and beverages and gift vouchers. This one-time initial expense net of one-time subscription collected would cost 5,000 per student. Means it will cost for Cineworld for each and every student 5,000 as an initial expense. On subscription to the plan, viewership and purchase of each student is expected to be as follows. So if it incur like this, they will spend on movie tickets, beverages and sovereigns like this, like 2,000 in the first and second year, 1,500 in third and fourth year, likewise. And what are the other points they have given? Only 50% of subscribers are expected to visit the theater in the years 3 and 4 across all the years. Only 75% of subscribers who visit the theater are expected to buy the food and beverages. So for each and every point they are telling for movie tickets, first they need students. What they are telling, if 100 students came in first and second year, only 50% will come in third and fourth year. And for food and beverages, only 75% of persons who visited will be purchasing the food and beverages. Means if 100 people are 100% came in first year, 75% of them will purchase in second year. And if 50% will come in the third and 4 years, 75% of that means 37.5% of that will come and will eat food and beverages. Only 25% of subscribers who visited are expected to buy the sovereign in 1 and 2 and 10% in 3 and 4. Means in first and second year 100% will come, no? In that 25% will visit to buy the sovereigns. And for second, third and fourth years 50% may 10%. So 5%. These are the percentages required. PF present value factor 10% for 4 years, present value factors for 1 and 2 for 10 at 10%. Then what about present value factors for annuity factors for 3 and 4 years? How much? 3.169 minus 1.735. 1.434. See, if this is at for 4 years and this is for 1 and 2 year, if we subtract this from this, we get for 3 and 4 years. So 3.169 minus 1.735 is present value annuity factor for third and fourth years, 1.434. Calculate the customer lifetime value per subscriber for the above plan. So we have to calculate the present value. I told this, actually I have explained this in the content itself. We need to calculate the present value of customer. Means after reducing the expense, after calculating the income in the present value, we will arrive at this customer lifetime value. So first calculate the present value of customer. For tickets, they will come in first and 1 and 2 years. How much they will spend? 2,000. For third and fourth years, they will spend 1,500. And present value annuity factor, bring it to the present value. 1.735, 1.434. So 2000 into 1.735, 3470. 1500 into 1.434 means 2151. In that, what they said, only 100% will come in first year, means total 3470 will they spend. In this, only 50% will come, means 2151 into 50%, 1076. For food and beverages, for 1 and 2 years, 4000, 3 and 4 years, 3000. 1.735. Just we have to bring it to the present value and multiply with the percentages we have given. So 4000 into 1.735, 6940. In that 100% means in that only 75%, no, 75% will eat. From in 100%, only 75% will spend on food. So 6940 into 75%, 5205. Next, 2151 into, calculate the present value in third and fourth years. 3000 into 1.434, 4302. And in that only 37.5%. 4302 into 37.5% will be 1613. And in for sovereigns, in 1 and 2 years, 3 and 4 years, 2250, 750, 1.735, 1.434. So present value 2250 into 1.735. 3904. In that 25% into 25%, 976. 750 into 1.434 equal to 1076 into 10%. Okay, 5%, no? Here 5%. So 54. This is the present value of income. 3470 plus 1076 plus 5205 plus 1613 plus 976 plus 54. 12,394. From this we need to deduct that one time expense will there. No, we are not bringing this to the present value because we will incur it today, present in the initial. So minus 5000, 7,394. This is the customer lifetime value per subscriber.